Welcome once again to Retirement Designed Differently with financial advisor Billy Voyles. He's the founder of Fundamental Wealth Designs. I'm your host, Spike Spengel. Billy, what is on your mind this week? What do we need to talk about?
Spike, on my mind this week is news and current events. Getting caught up on everything that's been newsworthy lately. The Fed sort of leading the headlines there. What is the Fed up to? What are they doing with lowering interest rates? What does that mean? How does that impact us as everyday Americans? And then also some interesting surveys that have come out with some interesting findings. Yes.
Yeah. Folks, we call it news or noise. Do you need to pay attention to what's going on? We know that in today's 24-hour-a-day, 7-day-a-week news cycle, you might be reacting to the stories every single hour of what's going on. But Billy wants to help you stay focused on you, your family, your planning, your needs, and that's why we want to go through some of these current event stories right now. Also, are you gambling away your retirement? We'll explain what that story is later in today's program. But the Fed, this was a pretty large interest rate change. They usually do it at 0.25, as they like to say, basis points in the industry. We don't like the jargon, though, but this was a lot larger than normal. Why do you think that happened, Billy?
Yeah, the Fed sort of announced a pivot at their Jackson Hole meeting, and they're pivoting from paying attention to inflation to paying attention to unemployment. So what does this really mean? Well, it's kind of twofold. One, the shift from inflation means they feel like they have inflation under control. And I'll let you be the judge of whether or not you feel like inflation is actually under control or not. But they're also seeing jobs reports sort of starting to go the wrong direction when it comes to unemployment. So, you know, the Fed has two mandates. They want, they want moderate inflation, like 2 to 3%. They do want some inflation, but then they want unemployment to be as low as it can be. So they have this dual mandate that they try to, I would argue now they're trying to control it, which, they're taking extraordinary actions in order to do so.
Do you think we're going to see any more either at the end of the year, depending on when we're broadcasting, or the beginning of this upcoming year as well? Are these rates going to keep going down a little bit, you think?
Yeah, that's what is signaled right now. We believe that they would probably lower rates before the end of 2024 again, and possibly into 2025. There's numbers being thrown around as high as 2% lower throughout the end of 2025. So if they continue to lower interest rates at that rate, it's going to have some impact on several different areas when it comes to the economy. Some of it's good news, right? On the buying side, it's good news, because if we go to get a mortgage, our mortgage rates could drop into the future. If we go to get a car loan, our car loan might be less. We work with a lot of clients that access their home equity because they have so much home equity built up. So their HELOCs and their home equity loans rates could drop. So all of this is good news. And then on the flip side, for companies, it could be good news as well, because if they go to invest in projects, it costs them less money to borrow, and therefore would have a higher rate of return on some of their projects for expansion that they go through. So it does have a ripple effect throughout the entire economy. Some are good news, some are bad news when it comes to that. Because there's overarching the whole theme, there's a reason they're lowering interest rates, and that's because unemployment's starting to not look so good. So, what really is going to happen is a good question.
Right. Let's connect this, though, for our viewers as well. As a financial advisor, as the founder of the firm, I've had the good fortune of being able to go to one of your live events, and you talked something about refinancing your retirement. We all know that we refinance our mortgages when interest rates go down. So if you did have a higher interest rate, let's say over the last year, you might be able to. Now, that might cost you a lot of money. But let's say you had an interest rate on a mortgage 10 or 15 years. But we say the opposite is true when interest rates are going up. What about our tools for retirement income that were tied to interest rates? Does that mean that these high numbers are no longer going to be available soon, or can we expect them to stick around? How do we review this right now?
Yeah, and that's one of the things we're going to have to look at, because there are a lot of investments and or products that are sort of tied to current interest rates. One that's obvious is your CD at the bank. And a lot of folks out there, if you're sitting out there and you sort of have a bunch of CDs at the bank, or you've done what's called a laddering strategy, where you have CDs maturing at various times, we run into this a lot, where those people, they tend not to like the market, right? There's a reason they have their money in the bank versus the stock market. And it's because they don't like to take risk typically. And they've been enjoying 5% CD rates for the past couple of years. So they've been comfortable with that. But now with this lowering of interest rates, in 3 months or 6 months or a year, when you go back to that bank, it's likely that they might not pay you 5% on the renewable rate at that CD. So then a lot of folks have been coming in saying, you know, do we have other options? What other options are on the table? And other options, you know, fixed annuities are other options, fixed income bonds are other options, dividend paying stocks are other options. Like a lot of other you know, tools in the toolbox, if you will, can provide income and maintain them at a higher level for longer than a CD.
Right. And we talk a lot about process, and we take our time, and what you do, the fundamental wealth design, it's not about a pitch or it's not about a product, but we do have to say that as far as some of these interest rate tools for retirement income, isn't it a little bit time sensitive that if you're looking at turning your asset into an income tool, if interest rates are coming down, that means those better tools might not be available as long. Is now an important time to act.
Yeah, and interest rates sort of peaked in the summer, and we did some shows throughout the spring and summer that basically highlighted, like, this is the best time to retire in the last 20 years. And the second best time is right now, because we do know that interest rates are going to drop in the future. So these safe, secure investments that you have options in looking at, as interest rates drop, the value in those opportunities is going to be significantly less. One example that we walk through is, you know, if you have a 6% payout of $500,000, that's $30,000, right? If we drop just by 1% going into next year and you get 5% instead of 6%, that's $25,000. You just lost $5,000 annual income because you didn't act today. You waited 6 months to act, and interest rates were lower. And the thing we know is they're going lower. Right? We already know that this is going to happen. It's just like taxes. We know taxes are going up in 2 years. Like, these are things we know. So if this storm is sort of brewing on the horizon and you know you need to take steps to address it, why not today? Why are we waiting until later when we know the situation is going to be worse?
Right. The summation on this one, interest rates going down, news or noise, this is news. And this is news that you need to act on. You need to get your own fundamental wealth design started right now. We don't control the interest rates. We try to report and let you know exactly what's happening as it's going on. This is an important story right now. So if you have had an income-based tool on interest rates, let's say that was 5 or 10 years old, you want to get that review if you didn't act over the last year or two. Let's get that started right now. It's really simple. Call the phone number down on the bottom of the screen, or you can use that QR code. Open up your camera there on your smartphone, point it at the QR code over here, and it'll click right over to Billy's website. You can schedule your own appointment right there. More news or noise, what do Americans, pre-retirees, fear more than death itself? We'll explain that when we get right back after this.
We've coined the term retirement design differently. People might ask why and how are you actually different? Well, 1, we are independent, take a fiduciary approach, and 3, we take a completely holistic approach at the same time. Having those 3 things at our disposal allows us to build exactly the type of plans we want, and we do so by following a very sort of specific guidelines in doing so. So the first is we want to create a foundational income plan for you. You have to know where your money is going to be coming from in order to spend it. Second is minimizing taxes, because we want to pay the least amount of tax legally possible over the rest of your life. Third is we want to make sure that we maximize sort of that risk-reward relationship. We find a lot of people coming in, they're paying excess fees, they're taking too much risk for what they're actually getting in return. And then last, let's have some fun. Because otherwise, what are we retiring for, right? We still have to have that goal, that why of retirement.
Welcome back to Retirement Design Differently with financial advisor Billy Voyles. He is the founder of Fundamental Wealth Designs. I'm your host, Spike Spengel. This week's show, we like to do this every quarter or so, news or noise, talk about the current events that our Americans, pre-retirees and retirees are all hearing about. We just talked about interest rates. That's really important. But Billy, you gave me this, something that pre-retirees fear more than death itself. What is that?
A little scary. It's actually retirement itself. It is a very daunting process to go through in retirement, to move from your working years that you've spent 30 or 40 years working, and now you're going to transition into retirement. And there's financial considerations, physical considerations, emotional considerations. And a lot of you out there have seen friends go through some sort of retirement. One of the crazy things that happens just out of the blue sometimes is, you work for 40 years and you had a friend retire, and within a couple of years they pass away. And so why would I want to stop if that's my end game, right? Yeah. So there's all these considerations that you have around retirement. So our planning is more than just financial, right? Our planning involves emotional discussions. It involves talk about relationships, talk about activities, and what are you going to do in retirement? Our first meeting, we get into it because we know that it's important to be able to transition not only financially. For us, frankly, financially tends to be the easy part to support clients because that's what we do every day. But supporting them emotionally and physically and giving them things to do is a part of where I think we add real value to our clients.
I think it's important for the viewers to know as well that you're not alone if you're feeling, whether it's anxiety or fear or just you don't know what you don't know, you're not alone. Yeah. A lot of folks are having a hard time figuring out the numbers. And I think it used to be easier, at least for parents, maybe grandparents 30 or 40 years ago, because you knew you were going to get that pension. Yeah. Probably close to having the mortgage paid off, and it was maybe a little bit simpler. What are some of the factors, do you think, that are causing this fear? Is it healthcare costs, like long-term care? Is it not knowing how to manage the assets? Is it the higher taxes you talked about before? What are some of the other factors you think that might be contributing to the anxiety?
Yeah, and I think if you're going through this and you feel like you're the only one, that's certainly not the case. We deal every day with folks coming in with a variety of different concerns. I think on the one side, that's the workaholics have a real problem in sort of transitioning out of work because then they feel like they might lose this sense of purpose of what is my purpose now that I'm sort of shifting into retirement. Others, they enter retirement and they're busier in retirement than they were in their working years because they have 4 or 5 different hobbies. They have grandkids that they watch and take care of every day of the week or whatever their schedules might be. They're busier and they're more concerned with the financial side, supporting the lifestyle that they want to live. But we do workshops around the Twin Cities, and if you're interested in attending one of our workshops, they're on our website, so you can click the QR code that'll pop up here at the bottom of the screen, go to our website, check out upcoming workshops. We host dinners, we host lunches, we host them at libraries, so whatever environment you feel like is the appropriate environment for you to come check us out at, feel free to do so. It's a non-threatening sort of just educational environment where you're going to learn more about your retirement. And I think that that's part of what we can provide to clients is just education. And the more you're informed, the better you feel, about a particular situation because now you feel like you're empowered to make decisions.
I really enjoyed what you said before, that it's not so much about the dollars and cents. That's almost the easier part for you as a financial advisor to figure out. It's those lifestyle and those connection kinds of questions. In fact, I think you said, didn't you have a client event recently, and you're kind of bringing your own community together of people who are kind of a lifestyle at the same time. Let's share our, what we're doing and what's going on. It's nice to create that community.
Absolutely. So that's one of the things we love to do is to entertain, right? Education and entertainment. We talk about the twofold approach. Well, this past Thursday, we actually did a dinner cruise, boat cruise on the St. Croix River, launched out of Stillwater over there. And we had a great evening. We actually kicked it off with a bingo card event where the clients, they had 25 different areas, facts that they had to go find others that could fill the facts, like left-handed, had a master's degree, owned a business, bowled a 300 game. No one checked that box. But whatever it was, then they collected all their bingo cards and then they put that into a raffle kind of at the end of the night. We had a great band on board, so we had a couple people out there dancing. And it really, it engaged our clients and allowed them to go out and have fun for an evening, right? One of my clients mentioned that it felt like it was at a wedding, right? With the band playing and people dancing and having fun. And who doesn't like to go out and really enjoy all there is to life. So that's more of like contributing to the social side of retirement, giving folks something to do, someplace to enjoy. And then, you know, clients becoming friends is fantastic. When they have never met before, and yet at the end of an event, or, you know, they end up being friends, you know, with other clients, it's a really cool impact that we can make on their lives socially, as well as obviously the financial.
It's a huge thing, because retirees talk about that all the time. You're not necessarily meeting new friends. You have your family. Sometimes your friends are moving to other parts of the country, or unfortunately they pass away. But here, creating a community of folks who are kind of doing the same thing in the same pocket of life, that's fantastic. And it's all about designing it. I think, though, starting out from 10 minutes ago, the fear for pre-retirees is actual retirement itself. I think fear comes from the unknown.
Yeah.
And the unknown is maybe not knowing what you're going to spend, or not knowing what kind of surprise costs you're going to have. Is that in part what the fundamental design is about?
Yeah, absolutely. So the different fears, rising costs of long-term care is a huge one, right? And there really, I say it in the workshops, there really isn't a great solution. But you need to be educated on your options so you can make an informed decision of what's best for you and your family. Everybody has different family dynamics. Some people have a lot of kids that, you know, they can step in and help them in the future. Others are out there and you're single and you don't have that family support. So maybe you want to take further steps in order to make sure someone's caring for you at a high level as you age. Other parts of this are just adapting new routine of lifestyle that we sort of talked about, and thinking through part-time work for the workaholics is big. So whether you work at Menards, or you want to go work at Lowe's, or you want to get a job at the golf course, or everybody jokes about the Walmart greeter thing, you know, but it's engagement, it's water cooler talk, it's something to do, it takes up time, you know, and the paycheck may or may not be necessary, right? But again, the social engagement is. So we have a lot of clients that part-time work is just something that they do, not for the money necessarily, but just for the social activity.
Yeah, I've always said I'm going to find a little beach town somewhere, and I'll be the guy who scoops ice cream late at night. I know the teenagers don't want that shift, so I'm going to do that.
Yeah.
And that way you get to meet everybody who's in the town, having fun. But whether it's that, or giving to your community, or education, or maybe even finding something else that you've always wanted to do and create, staying engaged, being engaged, but it is part of a design. And I know this is a financial program, but it's all about lifestyle. What are you going to do in retirement? Like you said at the opening of the show, the person who sometimes retires, passes away a couple of years into it. It's maybe we didn't have that purpose, that goal, something to keep us motivated. Yeah. So you talk just as much about lifestyle as you do the dollars and cents.
Yeah, and that's what our first appointment is all about. It's that foundation meeting is what we call it, because we're creating a foundation with you as a potential client in the future. We don't know if you're the right fit for us, or in return, we don't know that we're the right fit for you. But what we have to do is take that first step. And that first step is really just scheduling a sit down with us, an hour of your time to talk through your situation, to talk through your fears in retirement. What is really bugging you? What is on the horizon that's really concerning you about your retirement? Is it income? Is it lacking income? I'm giving up a paycheck. Where do I get that next paycheck from, Billy? Is it taxes? Are taxes really irking you as to the projections of where tax rates could be, and you're sitting on that big 401k? Is it the investment side? Does the market make you nervous? We're at all-time highs, but sometimes that comes with nerves because we sort of don't know what's next. If you're out there and these are all rising concerns for you, and it's unsettling for you, then pick up the phone. You got your cell phone right there, most likely. Give us a call. The number is 888-379-1846. We have a team standing by with our calendars available. We can schedule a quick 15-minute consultation with you, or schedule an appointment to come into one of our offices throughout the cities, sit down and walk through your situation so we can get rid of those fears about retirement.
Thank you so much. Folks, you're watching fiduciary financial advisor Billy Voyles. He's the founder of Fundamental Wealth Designs, and we want to get you started on your own fundamental design for retirement. Starts with a phone call. Just dial that phone number down on the bottom of the screen. You might need a financial advisor when we get back right after this.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision, so why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
Welcome back to Retirement Designed Differently with financial advisor Billy Voyles of Fundamental Wealth Designs. Well, you might need a financial advisor if, what is it this week, Billy?
You might need a financial advisor if you're gambling away your retirement.
Oh, wow.
And
wow.
It's incredible the numbers we're seeing in these online gambling apps.
Just watching the football games over the weekend, every single commercial break was some different version of gambling app.
Yeah.
And I remember when you used to just be able to pick the games with your friends, like in a Yahoo group, and you give each other grief on Monday or Tuesday morning after all the games are wrapped up on who did well. But now we need to gamble on it. I'm worried about that $50, $100 a weekend for 20, 30, 40, even 50-year-olds who think that it might be inconsequential. But what about the real numbers? What about the folks who are putting numbers into these gambling apps? Have you seen any of those?
Yeah, one of the statistics that stood out to me is for every dollar that goes into any sort of gambling, we lose $2 of investable assets for that, is just like the numbers they've been tracking with these folks. And it really is discouraging when it comes to that. And it comes back, to me, it comes back to this idea of, you know, controlling spending in general and like knowing and understanding where our money is going on a month-to-month basis, because it is so tricky. $1,000 a month over a retirement ends up being about $1 million, where you're either going to need $1 million more at the beginning, or you'll have $1 million more to leave a legacy. And it's only $1,000 a month. It's just the power of compounding interest and adding up, whether you're saving that $100 or $200 a month or just blowing it, hoping Justin Jefferson scores the next touchdown. That becomes, a problem. And, you can also talk about gambling in terms of the market, right? Are you taking too much risk in the stock market, being that you're only 1 or 2 years away from retirement? Do you know how much risk you're even exposed to in retirement? So that's another area that, it's not necessarily gambling the way Vegas portrays it. Right. But if you don't understand the risk you're taking in the game you're playing, that's a problem.
And I think it's a surprise to a lot of folks that year or 2 or 3 before retirement. That's why it's so important to actually get a portfolio review in those last couple, 3, 4 years, somewhere before there, because I don't think people are aware of the kind of risk. Because if we can go back to 2008, and people who maybe in 2007 say, oh, I'm going to retire next year. Well, when the markets went down by nearly 40%, there are a lot of people who had to turn around their retirements and keep working until that came back. So are you gambling away your retirement by not knowing the risk you're taking? When it comes to betting on the games on the weekends, I'm sorry, I just think because of our phones and our laptops and our tablets, we've become very short-term focused society. Planning for retirement and building those assets, that's long-term focus. Yeah. And they almost need a trainer to get them back onto it. Do you mind retraining everybody, getting back focused on this?
Getting back focused. And one of the things that a lot of Americans have actually taken advantage of is getting away from that idea of gambling their retirement. And one of the sort of shocking facts that I came across is this concept of annuity sales in the U.S. are record-breaking over the last 3 years. And one of the reasons for this is actually a lot of big box advisors are actually adapting annuities into their practice when they had never looked at them before, because interest rates and payouts are so high, and they're also can be guaranteed. So this concept of taking the money out of the market where we've been winning and then moving it, shifting it to a guaranteed investment is something that more Americans are taking advantage of each and every year. $113 billion in the first quarter of 2024 was moved into guaranteed strategies like annuities, and they're setting, this is the 3rd year in a row of record-setting sales, and it's a function of interest rates. And it's also a function of advisors realizing the value in the new annuities that are offered today, not the annuities from 20 or 30 years ago that your grandparents had. They're different today. And they're setting records because they have a lot of value to them and they make sense for people.
You can look this up on your own. The reported company that Billy saw here was from LIMRA. They've been reporting stuff like this for nearly 100 years. Third year in a row, record-breaking sales. Americans are saying, we want to make sure we've got some version of guaranteed income. They're done with the gambling on their retirement. And if you haven't gotten the message yourself, that's okay. That's what this program is here for. Let's find a way to create income that you possibly can't run out of in retirement. And it likely will not be just keeping it in the markets. That's gambling away our retirement.
It is. And if you're out there and you don't have a pension and you're sitting on a large 401k or IRA and you want a portion of your income guaranteed, you know, annuities are a great source to find it, and they make a lot of sense. And with interest rates where they are, you know, your payouts can be 5, 6, sometimes 7%, depending on your age. That's a great payout. And if you look at the comparison of the 4% withdrawal rule, right? If you can get 4%, Spike, and then maybe it'll last forever, or you can get 5 or 6%, but it's guaranteed to last forever. I mean, which one would you take? It's a no-brainer, but some people are out there and they're like, well, I'm not doing that because it's an annuity. And the word annuity is in their way of making an informed decision that would help support their retirement. And I don't want that to be the case because there are bad annuities. Like, you know, one of the things that has actually dropped is this concept of a variable annuity sales have dropped significantly because they don't offer as much value to clients. They are loaded in fees. They don't have, you know, the market protection that the others do. So, you know, they have actually declined in sales. So we're seeing that. So again, whether it's, you know, whatever the plan needs to be, you need a plan, right? As you enter in retirement, the fear of entering in retirement, you know, can be taken away by having this income plan for you, by having guaranteed income for life associated with your retirement plan. It takes away a lot of the fears that we talked about today out of your retirement. But along the way, what you do want to do is work with a fiduciary that's going to find the right one for you, and then also incorporate that with your tax plan and your investment plan to make sure you can live the retirement you've always dreamed of.
Billy, thank you so much. You know, these are some of the stories that are going on right now, but I know that next week there's going to be more stories, and the week after that, and the week after that. And I think one of the most important things, if you can take it away from this program, is try not to react with your investments to the news of the day and of the hour. You need to have a plan. You need to have a long-term plan, something that's going to get you to and through your retirement. And that starts right here by getting your own retirement design. Call the phone number right now. Folks are standing by. Thanks for watching. Billy will be back next week.